Welcome, everybody, ladies and gentlemen. If I seem a little distracted, I think it's because that panel started to talk about an energy shortage in 2019, which we haven't heard in a long time. So, as I say, if I'm a little distracted, it's kind of thinking about higher oil prices, something that I don't think any of us have really been thinking about for the last 4 years. It's kind of been about survival. We are a Canadian-based company that's duly listed in Toronto and in London. All of our production is out of Trinidad. That's where we've been focused for the last 6 years. And I'll walk you through the story. It's all onshore and it's fairly simple. Myself, this is the third public company that I've been involved in. We sort of always look for the same thing, something that has large resource in place, that's been underdeveloped technically, where we can add some science to it and build it up. Last couple of companies I've been involved in, we took to about 25,000 barrels a day of production, and then we either monetized them or moved them into a different entity. Scott Budow came through, our CFO came through the service side, and James Shipka, who's our Chief Operating Officer, has managed a number of different places. Last one he worked for was one of the Asian companies where he managed about 24,000 barrels a day of production. So Touchstone itself, it's as I say, it's very simple. It's all onshore in Trinidad. We have 20 blocks, 11 of those are producing. We are one of the largest onshore producers. You'll get to hear a little bit later from Trinity, who's one of our competitors down there. They also have an offshore component, but the story onshore is very, very similar to them. Current production is about 1,500 barrels a day of production, and we think we'll be at about 2,000 in early 2019 with the wells that we've got planned between now and the end of the year. As I say, we're dual listed on Toronto and on AIM. We listed on AIM on June 26th. We did a small offering at the time, about $2.5 million at 7.25p. We have low operating costs, something that we've focused on from day one, under $10 a barrel, certainly on the operating costs and the finding costs. This is a cash flow positive business. We generate about $500,000 to $600,000 a month of positive cash flow currently. As prices moves up, that will continue. The other thing you see there is 208 drilling locations. These are identified drilling locations that we have. And really what that is, that's about 10 years of inventory. You can drill about 20 wells a year with one rig. And that's the program we would like to start up in 2018, is to get one rig continuously drilling over the course of a given year. So that would keep us going, and we can talk about the cash flow that comes off of that. On the reserve side, this is our competent persons report that we had to file when we did the AIM listing in June. What you can see there is the value. We've got about a 15-year reserve life index, and depending on how you want to look at it, somewhere between $70 and $130 million of assets. Market cap currently is about $25 million. Gives you an idea there's a little bit of a disconnect between the value and the market cap. And what we think you need to do is get those wells drilled, convert a bunch of those reserves into cash flow, and when that happens, you'll start to see the market cap move up, which is what we started to do last quarter. We did 3 wells in Q2, and then the last 4th well rolled over into Q4. I'm going to talk about those specifically in a bit here. And then as far as the work program goes, although people are focusing on the next 4 wells we drill, what I'd really like them to get focused on is that continuous drilling program that'll start in 2018, which is 20 continuous wells. So take a look at Trinidad. This is a wonderful place to do business. They've been producing oil and gas there for over 100 years. It's 11 kilometers off the coast of Venezuela. Geologically, you're on the up-dip end of the Venezuelan basin. We saw some slides earlier today show how significant this part of the world is. It's got all the major producers offshore mainly, and then us onshore, which is really Touchstone, Columbus, Trinity, and Range. Those would be the main onshore producers, as well as one other private company. Huge industrial user of the hydrocarbons, the 6th largest LNG producer in the world. It's got one of the largest standalone methanol plants in the world and a huge ammonia plant. So it is very much an industrial island and a great place to do oil and gas business. The focus for us is going to be to target that 2,000 barrels a day in 2018. And when we look at that, you'll start to see at about 2,000 barrels a day, we can start considering paying out a dividend because of the cash position that we have on the balance sheet going forward. Taking advantage of lower service costs, they've come down about 30% over the last 14 months. So we're drilling these wells for under $1 million a well now, which is pretty remarkable when we think of the productivity. You can see that in the implementation. The last wells we've drilled, we were targeting about 50 barrels a day per well as the IP stabilized after 90. And now that we're about 100, we're almost 120 days into it, we're getting about 80 barrels a day per well. The 4 combined wells are 325 barrels a day. This is for 2 reasons. One, we're drilling to deeper horizons, so we're looking for new hydrocarbons. So we're looking for oil under the existing pools, a couple thousand feet deeper. We had never really tested that before because the rigs didn't have the capability, and quite frankly, it was a new concept. Every one of the 4 wells we drilled, we are now producing from those deeper horizons. Those deeper horizons, when I define deeper, they're about 2,000 feet. They're about an extra $100,000 per well, next to nothing. From the concept. So when you look at that 208 drilling inventory we have with the first 4 wells that have now given us the proof of concept, we think getting to that 2,000 barrels a day in early 2018 certainly isn't going to be a big issue. The other part that we want to do is take 10% of our cash flow and put that on exploration. And we've got a very large exploration block on the east side of the island, known as Oratois, that it's already got 77 wells that have been drilled on it since 1928, so there are a bunch of good indicators. And what we'll take is about 10%, or about 4 of our wells next year will be drilled on this block and can be brought on stream. You can see the size of some of the pools around this particular block, whether it's Balata, whether it's Cat's Hills or Navette. We're talking tens of millions of barrels per pool. And then Carapel Ridge, which is Shell's big property there. It's a monster onshore liquids-rich gas play that's been producing for about the last 10 or 12 years. So lots of great exploration on the block, as well as the development plan that we have. So what do we look like in 2017? Q2, the results, we had good cash on the balance sheet, had about $9 million worth of cash on the balance sheet, plus a little bit of a working capital surplus. So we're certainly financed up to go ahead with the program as we want to go ahead with the program. Netbacks at about $20 a barrel, so we're making money on every barrel that we're producing. And so the funds flow was only about $500,000 in that quarter. With the increased price and the increased volume, what we start to see now is we're really starting to see the cash flows ramp up as we go into 2017. We'll actually put out our Q3 numbers, although we're listed on AIM, and normally you would only report twice a year. Because we're in Toronto, we actually have to report quarterly. So again, on November 13th, you'll get a good look at our 3rd quarter numbers, which will be more reflective of those last 4 wells that we've brought on. So that's really it. It's a pretty simple summary. We've got 20 blocks on shore. We've got a bunch of wells to drill. The new technology is both looking deeper, using some new pump technology that we have, plus the exploration that we have at Oratois. I think it sets up for a great story, and certainly with the dual listing that we see now, liquidity's been really wonderful over the summer and into September. So that part of the plan has worked out really well. So that's the simple Touchstone story. Thanks for your time.